Hi everyone, in this video we're going to be looking at the Chapter 1 Excel homework, and this will be kicking off our Excel homework assignments that we will have in Accounting 4. So to begin, let me just give you a little bit of an orientation about the Excel homework files, since this is our first time working through one together. So as you can see, and from the name in the title, these homework assignments are going to be in Microsoft Excel. So you'll need to get a version of that. Hopefully you got that on your computer. It's available for free to students through Butte College, so on and so forth. You should be able to open this file and work on it, whether you're on a Mac or a Windows PC or a laptop, but you might need to import if you're using a Mac, because these were created on a Windows PC essentially. Okay, so hopefully you don't have any technical issues in that regard, but definitely reach out to me if you do, and we will get that figured out. Okay, and just one more thing to highlight here. We do have a number of tabs you'll see, and so you'll see Chapter 1.1, which corresponds to the first problem in the homework assignment, 1.2, and then I've also detailed the point value of each individual tab so that you can see how much each exercise is worth, and they are all intended to add up to 10 points total. So here you can see 3 for the fifth problem, 2, 1, so that brings to 6, 7, 8, 9, 10. So as you're going through the homework problems, I highly encourage you to finish the whole assignment, but if for some reason you aren't able to finish it or something along those lines, you will know how many points each individual question is worth, and you'll be able to better assess what your score will be if you don't finish the problems. Okay, so let's get into it here in the first problem. And I'm assuming that most of you are familiar with Excel at this point. You've got different cells here that you can click around, and in each of the homework Excel assignments that you'll see, I've highlighted all of the cells in blue. That's where the answers will need to be input. And the other information then is kind of just, information for completing the problems essentially. So having the blue there just kind of highlights, there are also instructions throughout the file, but hopefully the blue kind of draws your attention to the specific location and helps you begin working on that particular exercise. But as long as you're following along with me in these videos, I will guide you through basically the whole assignment as well. So you shouldn't be confused if you're following along, essentially. Okay, so let's get into it here. For each of the chapters, the first tab is going to be just kind of a breakdown of different questions, more of an explanation, provide an answer kind of a situation rather than a calculation problem. And this will help us kind of understand some of the terminology, the major ideas that are covered in each chapter, and orient you, give you context for what specifically that chapter's trying to communicate. So question number 1 asks us, pretend that you are describing the difference between managerial and financial accounting to your friend or parents who are not involved in business. What would be the difference? So this is managerial accounting 4, and you will have taken financial accounting previously. And so as you know from already taking financial accounting is very much focused on journal entries, financial statements, recording bookkeeping type transactions, so on and so forth. Whereas managerial accounting is much more internally focused, less so externally focused, and less bound by specific rules like the generally accepted accounting principles, US GAAP, things of that nature. Really, we're just trying to use accounting data, typically in managerial accounting, using accounting data to make decisions essentially about business and make predictions, all those kind of things. So let's put in a concise answer for all that. With all that said, so let's say financial accounting prepares reports for external users, such as investors, creditors, and regulators, while managerial accounting provides information to help managers, as the name would imply, managerial accounting, to help managers plan, control operations, and make business decisions. So there's a little bit, more nuance that we could dig down below that, but I think that's a good high-level explanation that really gets across the point that managerial accounting is more internally focused for a specific company. Usually in this course too, we're going to focus on manufacturers who are making products, and we're going to do some cost accounting, which is kind of a unique practice in accounting that we didn't really look at in financial accounting. In financial, we focus either on service providers or resellers, retailers, merchandisers, another way to say that. So businesses that just buy goods and then resell them. In this course, we're going to focus in, especially the first third of the class or so, on manufacturers and how to capture costs and assign those to individual products so that the managers can understand what a product costs and then by extension can make decisions about product pricing, so on and so forth. Okay, let's look at number 2 here. Describe the managerial accountant's role in business planning, control, and decision making. So let's see here. Managerial accountants help managers. So you're not the only, if you are a managerial accountant, you are a manager in regard to managing a business's costs and things like that. But you're usually, you're a part of a team. And so we're going to help the other managers in our team, and we're going to prepare budgets, evaluate performance, analyze costs, and provide information that supports planning, controlling operations, and making informed business decisions. So really, we're kind of a data analyst, if you will, really from a managerial perspective, and trying to both from our side as a managerial accountant, just understand that data and then kind of interpret that, or help others, I should say, interpret that information so that the team as a whole can make good decisions, right? So managerial accounting, you can have a starting career for an individual business doing this kind of work. But the information that we cover in this class, it kind of tends more towards, maybe an ending point where if you pursue this kind of career, you might find yourself as a CFO or some high, VP, vice president of financial planning and analysis, or just, managerial accounting, cost accounting, things of that nature. But it tends to be kind of focused, as the name implies, on managers. So more positions that are usually maybe higher up the pay scale and the corporate ladder, if you will. So maybe that's exciting. In one way or the other, it's interesting information to know about. And it's kind of just, the starting point for one of the pathways in accounting, of which there are many, which often, like I said, could lead to some sort of high-level position, maybe as a chief financial officer. In my own experience, as a CPA and then as a controller and finally as a CFO, I found myself doing the most amount of this type of work when I was in that CFO role. So a lot more business strategy, planning, forecasting, understanding the data, and then understanding the data and then using that data to make decisions about the company, or to help the team make a decision about the company, the future, etc. Okay, let's look at number 3. What is the difference between A, factory overhead, and B, selling and administrative costs? And can depreciation costs be either A or B? So this kind of ties in, the last 2 questions talked about more high level, what is managerial accounting kind of as a concept. And now we're getting into the idea, like I mentioned earlier, of cost accounting. And so when we're looking at these costs for a manufacturer, the word factory in there, we want to start differentiating these types of costs to be able to apply them to the products as a product cost or a period cost. We'll use those terms here. And so here, we can be looking at a depreciation. So if you recall back from financial accounting, depreciation is the systematic reduction, essentially, if you will, in the cost of a long-lived asset. So if you buy a vehicle, for example, or something along a large piece of equipment, et cetera, something that the business is going to use typically for longer than a year, then we're going to depreciate, recognize some expense every month, and essentially reduce the net value or net book value of that asset. And so when we're asking whether those costs, those expenses I'm talking about for depreciation, would they either be factory overhead or would they be selling and admin expenses? It really depends on what the specific type of equipment we are talking about. So let's say, yes, depreciation can be either factory overhead or a selling and administrative expense. We use that terminology there. Depending on the asset being depreciated. For example, manufacturing, I guess I didn't capitalize that, manufacturing equipment would be factory overhead because it's used in the factory for the production of the company's products, while what do we want to say here? Let's say office equipment would be considered a selling and administrative expense. And you might even break that down a little further. We'll leave it at that for now. But maybe it's admin versus selling. Maybe sales would be a different department. But really the idea that we want to start thinking about when we're talking about these kind of differentiations is, do these costs, are they directly associated with the production of a product that we will eventually sell? And we're going to call those product costs. Or is it an expense or a cost that's related to more of, as we're mentioning here, a selling or administrative function? So, if it's selling, that would be related to salespeople, maybe as an example of a selling item that would be depreciated, maybe it's a vehicle that a salesperson is using in the business when they're traveling to do sales. And that depreciation would be considered, a selling expense. And then if we have, a copy machine, for example, that the accounting team is using, or the whole, admin, HR, accounting, things like that, IT, if we're all using that more in the office, that's not directly related to the production of the product. It is, kind of overall as part of the business, but that's the differentiator, is who does it actually directly feed into the production of the product. And so a copy machine that the admin departments like accounting, IT, HR are using, that would be considered an administrative expense or a period expense, essentially. And we'll talk about it more as we get into different exercises and in the in-class exercises and so forth. But the differentiation is, if it's a cost that directly ties into producing the product, that is going to be capitalized as an asset or inventory until the time that the product is sold. Whereas the depreciation expense for a office copy machine or the depreciation for a salesperson's vehicle would be considered a period expense, and we would just record that as an expense at the end of every accounting period, maybe every month, regardless of, it's not tied into the sale of a specific product. So important concept, keep that in mind. And we'll touch on that quite a bit more going forward. Okay, question number 4. Which product is listed as both a prime cost and a conversion cost? And I'll just list out here and we'll talk a little bit about what a prime cost is. So a prime cost, it is the combination of direct materials and direct labor. So those are two important concepts. And when we say direct materials and direct labor, those are product costs like we just mentioned before. And those are specific, direct materials is going to be the raw materials that we use to create our products. And then the direct labor will be work performed by individuals directly working on the product. Like think of, a worker on a factory line that's actually making the product. So those are prime costs. And then we have this concept called conversion cost. And a conversion cost is going to be direct labor, again, similar to same as the prime cost, but then it includes factory overhead. And when we say factory overhead, this is going to be costs that are not specifically traceable or, that you can directly associate with the production of a specific product. So if we have some factory equipment, that we're using constantly for the production of different products all day long kind of thing, we're going to call that overhead. So factory overhead. We could also have there's a whole listing of items that would fall into overhead, and we'll talk about that throughout this chapter. But again, that could be things like even like property taxes on the factory building. For example, it wouldn't be practical to try to associate some allocation of a one-time, or a single property tax payment into the production of, this specific batch of whatever your product is, versus an employee who's spending their direct time creating that product or using direct materials to create that product. You could, and we'll talk about this as we go through the next few chapters, there's processes and we'd want to directly associate those costs right into that one batch or that one product. So hopefully that makes sense. And then this question specifically is asking here about what's listed as both types of costs. And as we can see above, we'll just say, as you can see above, direct labor is considered both a prime cost and a conversion cost. I will say those classifications are not super important, prime versus conversion. We talk about those a little, good to know, but it's much more important that, as we spoke about previously, for you to understand the difference between product costs and period costs, and then kind of be able to associate and identify what's a direct materials cost, a direct labor, and factory overhead, so on and so forth. So that's really going to be where you want to focus your attention. But good to know. You'll see these terms pop up a little bit as far as prime and conversion goes. Okay, question number 5. Why does a manufacturing company require 3 different inventory categories? And the answer here really is kind of ties into an introduction to this process and this kind of information flow from an accounting perspective for a manufacturer. And what we're going to try to capture in having these 3 different inventory categories is what kind of state is the product in at any given point in time, right? Because we're not buying the products, so they don't come finished. If we're a manufacturer, we're making the products. And so we'll say the 3 different inventory categories, and we'll say which include raw materials. So that'll be just, if you're a baker, for example, maybe you have a cake store or, something along those lines, bread, making some kind of bakery products. Your raw materials might be the flour, the eggs, the sugar, the salt, so on and so forth. Just those raw materials before they've been combined in any way to move towards that finished product. So that's different. That's a inventory category number one. Second inventory category will be work in process. We'll put that here now. WIP. We'll use WIP. It's just easier to say. Sometimes you might see in the book or in the lecture slides, goods in process, I believe they use. So it means the exact same thing. I like the term work in process. WIP just flows off the tongue more, and I feel like that's more commonly used. So we'll use that here. But do know that is another name you might see. And finally, and let's get back to our bakery example. This would be something where you would have if you're a baker, you might take all your flour and water and eggs and sugar and everything, and you put that together in the mixer. And so what was raw materials when it was just in those bags of flour, once it's in the mixer and you got some dough going, for example, that would be work in process, where it's not finished yet, but it's in process. And so we're going to subdivide these into the category of raw materials, and then it becomes work in process. And finally, once the product is finished, we're going to call that finished goods. So let's assume you're making bread, for example. Once you are done mixing and you've got the whole thing assembled and you've put it in its bag and everything, and it's ready to be sold, that's when it's going to be finished goods. So that just helps us. We'll use these categories quite a bit in the coming chapters, and it just those are really key fundamental concepts to keep in mind, just to differentiate. So when we look at this information from an analysis perspective, we're going to be able to identify what state the product that we make is in, and and we'll use that in different ways here that we'll look at going forward. I guess maybe I should write that down. We'll say these are used in order to track which stage of production the products and having trouble typing in products. Oh my gosh. Products are in at any given point. I think that works. Okay. Next question, number 6. What is the reason for the schedule of cost of goods manufactured? So this is a schedule that we'll work with in chapter 1 here, and you'll get some more familiarity with that through in-class exercises and so on and so forth. I don't know if we have, maybe there's a homework problem in here that we also use that. We'll take a look as we go forward. But what is the reason for this thing that we're going to prepare called the schedule of cost of goods manufactured? This schedule, let's say it calculates the total cost of goods completed during the period and transferred from WIP, so work in process. And let's use the word WIP inventory. So just to highlight, all these 3 categories are inventory. And then how much are we what's being completed, what's being transferred. So it's really a tool that we can use to kind of track all of the related production. It's these categories we're talking about with these 3, raw materials, work in process, finished goods. This schedule of cost of goods manufactured is the tool that we're going to use, the report we'll use to aggregate those amounts, prepare a report so we could look at that and see, okay, what happened this period, this month, for example, how much moved from raw materials into work in process, how much moved from work in process into finished goods inventory, how much is in those categories at the end of the period. All really, important information to consider for a manufacturing company. Okay, question number 7, the final one here. How do an income statement and a balance sheet for a manufacturing company and a merchandising company differ? So as far as the differences go, when we're talking about a merchandising company versus a manufacturing company, there's a couple nuances. These are very different types of businesses, as we've talked about here. Again, merchandisers buying products wholesale. You'll hear that word, wholesale purchases. That's where merchandisers, retailers can buy in bulk and with the intention of selling those products. And then again, we're comparing to manufacturing companies that are actually just buying the raw materials and then putting all the work into it, and creating a finished good product essentially. So as far as the income statement goes, or let's just start with manufacturing. And just as an FYI, if you're in Excel and you're doing something like this, it sometimes will pull in above because you're typing the same letter. So if you ever see that and you don't want it to copy down, you can just hit delete. It'll keep the first letter, but stop trying to autofill that cell. So just a little helpful hint. Let's see. So manufacturing. Geez, can't spell. Manufacturing companies. Oh my gosh. Manufacture products, as the name would imply. So they report, as we mentioned above, raw materials, WIP, easier to spell if I don't spell it all out, and finished goods inventory on the balance sheet. These are all inventory categories, just in different stages of production. I'll say, and calculate cost of goods manufactured before calculating cost of goods sold. Maybe I should capitalize that. COGS, if you remember, COGS on the income statement. So there's kind of an extra line item. We'll see that. Definitely see that in the schedule of cost of goods manufactured. And it's just one of the, one of the line items we need just for manufacturers. So merchandising companies simply buy and resell products. They don't produce any products themselves. Somebody produced it, some other manufacturer at some point, and then it gets in the hands of you might have heard the term middleman as well. A merchandising company can kind of be thought of as a middleman as a term. But yeah, buying from manufacturer, reselling it, to the customer. So you simply buy and resell products. So they, as in merchandising companies, have only merchandise inventory on the balance sheet, not 3 different categories, and they do not prepare a cost of goods manufactured schedule. So again, you will not have seen that in accounting 2, for example, and that's something that we're going to work on in this chapter as we talk about manufacturing companies. So, all right, well, thanks everybody. That's the last question here on our first Excel homework number 1 for chapter 1. And if you'll join me in the next video, we will begin working on the next problem here. Thanks so much, and I'll see you there. Bye.